Hello and welcome. This is Jason Van Sickle. I'm president of Van Sickle and Company, and this is the New Markets Tax Credits tutorial. I've been wanting to make this tutorial for a while because I'm increasingly asked by people how the New Markets Tax Credit Program works, and it is complicated. In fact, really the point of this tutorial is just to give you an overview of what the program is, who it benefits, how to qualify, and then what tax credits are received for doing all that. So let's just get started. Who benefits? Well, this is an incentive program created by the federal government to promote investment in low-income areas. This is a program that promotes investment in commercial investments in low-income areas. And so property owners and developers can benefit from this program because they can receive a 39% tax credit, meaning 39% of the qualified equity investment that's being made. Let's kind of stop right there in terms of the terminology that's associated with this program, because there is a lot of terms and a lot of complicated things that are involved here, and so let's just look at the overall picture. The program promotes investment in low-income areas. Those are called qualified equity investments, and then you get 39% of that investment is given back to you in the form of tax credits. That's the overall in terms of who can benefit and how they benefit. So let's talk a little bit about how to qualify. To qualify, what you do is you create some type of a legal business entity, a partnership, an LLC. That doesn't matter so much as you need to have a legal business entity, and then you apply to become a community development entity, and that's just the designation that's created by the federal government. The federal government has this Community Development Financial Institutions Fund, which is the fund that allocates the tax credits. It's run by the Department of Treasury, and in order to access that fund, you have to be designated by the Community Development Financial Institutions Fund as a community development entity. And there's certain steps you have to go through with certain pledges that you have to make in terms of how you'll use your funds to get that designation. We'll go over that in a future tutorial. But for now, just understand you have to get designated as a community development entity. Once you do that, then you can go and submit a proposal saying this is the investment we're going to make, and this is the area we're going to make it in, this is what the funds are going to be used for. When you do that, hopefully you get approved, your plan gets approved, and then you are qualified to move forward and start getting investments. Now this is different. This is different than most other tax credit programs in that in most tax credit programs you apply for tax credits. So you say, here's my project, I'm applying for tax credits, and then you get a response that says you are or you aren't approved. But if you are approved, here's how much in tax credits you'll get. With this, it's a little different because what you're doing is getting approval to go forward with your project, and then you go raise the funds. And so if you get an approval for $10 million, that means you're getting approval for a $10 million project, not an approval for $10 million in tax credit. So if you hear somebody say we've got a $10 million New Markets Tax Credit Fund that's available, they're meaning for $10 million in projects, not that they have $10 million in tax credits. And so in that situation, your tax credits would be 39% of that amount, so you get $3.9 million in tax credits once you have finished the investment. And so again, to kind of recap, you receive the funds, you receive the Community Development Financial Institution Fund approval. You then go out and raise your investment capital from investors. You invest the funds in a low-income area, and then you get the tax credit allocation. And in this situation, the tax credits are allocated out over a 7-year period. So the way that happens is from years 1 through 3, you'll get 5% of the amount each year, and then in years 4 through 7 you'll get 6% a year, which equals up to that 39% tax credit number. So again, if you do a $10 million project, you're approved, you'll get $3.9 million in tax credits, allocated 5% over the first 3 years, 6% over years 4 through 7. Now, it's very important, like any of these tax credit programs, that you maintain compliance to the rules and regulations that they have, all the things that you agreed to do up front, because in this program, it's not like the low-income housing tax credit program where if you fail to comply at some point, they cut you off and don't give you any more credits. In this program, if you fail, they go back and recapture 100% of the credits. Doesn't matter if you've already been given them and used them towards taxes, they come back and want them all returned. And so it's incredibly important that you understand what you're doing. Find an expert or consultant who can help you understand the program and understand what you're facing if you decide to utilize this program. And this kind of leads into my final thought. Always have a comprehensive project analysis completed before you start any project that includes these types of funds or potentially includes these types of funds. In fact, you should have somebody that understands tax credit programs go in and say, these are the programs you could potentially receive funding from. Here's how they'd fit into your project budget. Here's a pro forma analysis of how the numbers will play out in the most likely scenario, and here's step by step how things will flow through the course of your project, because spending a little bit of time and money up front can make a world of difference in terms of a project success. So anyway, if you want any more information on New Markets Tax Credits program, please visit our website, jvansickleandcompany.com. There's also information at the site for other tax credit programs, and if you're watching this video on YouTube, then please do us the favor of subscribing to our channel. Thank you.